Figma filing its S-1. By the way, I love this company, just so you know, because I use this stuff, and I think Figma is awesome. The design software maker planning to go public on the New York Stock Exchange under the symbol FIG. I don't know if I love it as a stock, just
right.
full disclosure, but the product. According to the filing, Figma reported $821 million in revenue over the past year with a 46% year-over-year growth rate. You may remember, I mean, this is a long journey here. In 2023, Adobe had tried to buy this company and then abandoned its plan to take over Figma in what was then a $20 billion deal. In his founder letter, CEO Dylan Field, who is a Teal Fellow, we should mention, writes, quote, given the trend of many amazing companies staying private indefinitely, you might be wondering why I've decided to take Figma public in the first place. He writes about obvious benefits, including liquidity, adding, quote, I like the idea of our community sharing in the ownership of Figma, and the best way to accomplish this is through public markets. He later writes, expect us to take big swings when we see a chance to invest in our platform or pursue M&A at scale. And we just had a big conversation yesterday on our broadcast about just the idea of so many of these companies actually staying private for longer and what it means to the public markets. Also, by the way, what it has meant for a long time, just to talk about liquidity, illiquidity of just how much money venture capitalists and private equity have not gotten back. There's no exits happening, which means that the pension funds have no money to give, and they don't have any money to get back. And so there's got to be a way for more companies to go public. We also had a guest on yesterday talking about how they're now trying to, I don't know if you saw this, tokenizing effectively the private market and what that means. I don't know. We'll have to see whether
for increased liquidity.
I don't know what regulators should really be thinking about that. It's a little bit more like ICO, like you remember initial coin offerings. Companies that are private are considered private because they don't have disclosure requirements that public companies do. So once you start allowing the public to start buying into private companies that are not accredited investors, it's a very complicated scenario.
There's also a move on the SEC to
get rid of accredited investors.
Right, exactly. To basically widen the net as to who is considered accredited. Basically, anybody would be if they had the right education. Is a proposal. So that's also an interesting element to that whole discussion.